Good morning, everyone. Welcome to another Smart Knowledge U vlog. Today, actually, I am going to discuss the topic of why we are currently in a bear market for honor and integrity. And before I go on, actually, some of you have told me the audio may be a little difficult to hear, but I am going to get a separate standing mic because right now I'm just recording these videos on a GoPro camera. So don't worry, about a month or two, you'll have better audio quality. Unfortunately, today, society at large defines success by one sole determinant, and that is material wealth. Now, I'm not saying everyone does, but I'm saying society at large does, and that's very problematic. A lot of times when you ask the question, who do you admire, you get the typical list of billionaires. So like Jamie Dimon from JP Morgan, Lloyd Blankfein from Goldman Sachs, Warren Buffett, George Soros, etc., etc. But there are tons of criminals in the corporate world, and just because someone wears an expensive suit and tie does not actually make them any better of a person than even a drug cartel leader, as some drug cartel leaders have more honor than those people that make billions in the corporate world wearing a suit and tie. Of course, I'm not saying everyone is like this, because I've met people younger than me, I've met people older than me that have a different definition of success, where their definition of success is actually helping humanity, leaving the world a better place for others. But unfortunately, when I'm saying society at large, that is not their definition of success. So let me give you a hypothetical example. Say I actually was involved in a drug cartel, made hundreds of millions of dollars, and then I changed my identity, I moved to Macau, and basically invented some kind of backstory that sounds plausible, that sounds credible, whereby I told people I started a tech company and sold it for hundreds of millions of dollars. I guarantee you I would vault, as long as I was out in the public eye and attending high profile events in high society. I guarantee you I would vault to the top of the most admired people in Macau, just based upon the fact that I had hundreds of millions of dollars and was always attending high profile events. And even in the event that some people found out, in this hypothetical example, that my backstory was made up and not even the truth, there's still some people that would still continue to admire me just because of my material wealth. As many of you that have been following my blog or following my YouTube channel for the past decade, you well know that I left a Wall Street firm over a decade ago. And the reason I left was actually because of the systemic fraud, the systemic deceit, the systemic low character and immoral behavior that was rampant in the industry. And in fact, I won't name this global bank, but the CEO used to send us emails frequently on how to deal with upset clients that became aware of my firm's criminal activity that ranged from laundering money for Mexican drug lords. It included laundering money for Yakuza in Japan, manipulation of the European bond market. It's just to reap millions of dollars of profits within minutes. What else? It's just on and on and on and relentless. And each time this happened, actually, we directly received emails from the CEO of the firm on how to deal with the client, and his basic coaching to us to answer any client that was upset by these activities was to say we did nothing illegal, which was true, and that we admitted no wrongdoing but just settled the matter with a fine, and that the matter was shut and closed. And that in itself shows you that the people at the very, very top of the food chain within the banking industry know exactly what's going on, and they approve of the continuing criminal behavior that's happening. And that is a massive, massive problem when you ask me. And that actually led to just my disenchantment with the whole industry, and finally my resignation from the industry. The CEO of the firm was right in that our bank committed no illegal activities. That's because the bankers actually make the laws, because they pay lobbyists millions of dollars a year to lobby Congress, to lobby Parliament in every nation to change the law so they actually legalize their criminal behavior. So theoretically, think if I had enough power, I could make murder legal. So does that mean murdering people is okay just because no law was broken. So those are the kind of broken immoral arguments that corporate CEOs would make, and they gather wealth in this manner, and they gain a lot of attention and a lot of admiration from people as being successful in this aspect. So I'm going to tell you right now, every banker that's worked in private wealth management for a global banking firm has had an opportunity, I have to believe, because I encountered people that were not of the, how should I say, we're not of the most upright character that guaranteed making me money. I've encountered people who worked for drug cartels when I was a private banker, when I worked in private wealth management for these global banks, but I always turned them down. But I'm sure there's a lot of people, as was the case with Amy Elliott, that also worked in the same division as a bank I did, that actually had to go before US Congress and testify why she was laundering drug money for ex-Mexican president's brother. A lot of these billionaires care not how they make their money at all, and they willingly will ditch their ethics and their principles whenever there's an opportunity to make a buck. So let me show you this video.
And billionaire and philanthropist George Soros has once again come into the public spotlight, this time over his decision to invest in two major coal companies. The move has certainly raised some eyebrows, as Soros has been demonizing fossil fuels for years. Well, Soros hasn't minced his words when attacking the coal industry in the past, calling it lethal to the planet.
In that video you just saw, it talked about how George Soros was investing millions of dollars to buy some of the top coal companies in America when he once demonized fossil fuels, and he called them quote unquote lethal to the planet. But since the price of coal has fallen so much in 2015, and now there's massive opportunity to make easy millions of dollars, an easy yield on his return from an industry that he once called lethal to the planet, he ditches those ethics just to make more money. So this is what I'm talking about as far as why we need to be very wary of the people that we admire and that we call successful. Unfortunately, why a lot of people don't really get what I'm saying is because there's also a bear market in honor and integrity in financial journalism and in the mainstream media. So directly preceding the financial crisis in 2008, on April 23rd, I actually blogged that a US stock market crash was imminent, but yet people commented on that blog post and said I was an idiot, that the US stock market was nowhere close to collapsing, nowhere close to a bubble. And then what happened? Just 18 trading days later, the US stock market started crashing and didn't stop until it lost nearly 50% of its valuation. So why don't people get this? Why don't people understand the truth? Why do they reject the truth? Is unfortunately, like I said, there is a bear market in honor and integrity, even in financial journalism. If you look at the people that always paraded on mainstream TV, people like Dennis Garment, he's almost a perfect contrarian indicator. So when he says buy the US stock market, you want to sell the US stock market. When he says sell the US stock market, you want to buy the US stock market. When he says buy gold, you want to sell gold. When he says sell gold, you want to buy gold. But yet, even though he's literally wrong dozens of times just within 1 year and makes a fool out of himself, the mainstream media keeps inviting him back and back and back, time and time again, along with the same people that always predict Dow 20,000, Dow 25,000, and tell you to buy every single dip in the market. And why is that? It's because these people do the bidding of the criminal banker, so they're welcome back time and time again to mislead and deceive people. And because, you know, in fact, I can only think of one financial journalist that ever tried to expose the truth to the people, and that was Pedro Del Costa of the Wall Street Journal. And I tweeted back and forth with him, and I commended him for actually grilling US central banker Janet Yellen on where the leaks were coming from the Federal Reserve to Wall Street firms to help them make billions of dollars on inside trading information. And he continually grilled Janet Yellen, and eventually it was reported that he resigned from the Wall Street Journal, though I'm pretty sure the Wall Street Journal fired him. So that's what kind of lack of integrity is in the mainstream media. When journalists actually do some investigative research and report the truth, they're fired for telling the people and the masses the truth. So also there's no honor or integrity even in statistics, because corporate CEOs enronize their earnings per share statistics all the time by manipulating the denominator of that equation through even at times taking out multi-million-dollar loans just so they can buy back their shares to shrink the denominator to make it seem like their company is actually growing when in fact the revenues are falling. And this is how they get people to keep buying their stock. Not only are there fake growth parameters being reported, but there's fake GDP statistics being reported all around the world. There's fake employment statistics being reported all around the world. There's fake inflation statistics. So it's no wonder that no one really understands what's going on with the global economy. And even when it comes to people reporting what the returns are in their portfolios and other research newsletters, that a lot of times there's even false advertising through these simple means. You think, how could you falsely advertise? Well, people report annualized returns, but they're not actually real returns. So let me explain what that means. Basically, that means if you recommended an asset to buy and then close it out, and you did it in 1 day session, that would be 5% return, right? And that wouldn't look too impressive. But if you annualize everything, what's 5% times 365 days is 1,800 and some percent. So you can say, you can then report annualized returns of 1,800 and some percent, and that looks much more impressive than 5%, but it's not being real and it's not being sincere. So for example, in our Platinum membership for the first half of 2015, we were probably in gold and silver mining stocks for about just 40 days the entire year, because as most of you know, up until this point, gold and silver prices have been falling and mining stocks have been getting crushed. But in those 40 days, we actually returned about 31.6% positive yield to our Platinum members. But look at how this would look if we actually analyze returns. So if we analyze the returns over those 40 days, then I'm going to put a picture in here because I don't want to actually go through all the returns. But we could be reporting annualized returns of 1,104.13%, 689.85%, positive 592.21%, positive 486.36%, positive 548%, and on and on and on. You get the idea, and it looks much more impressive than just saying, okay, the gold silver stocks we recommend in the first half of 2015 yielded 31.6%. Because if you're seeing 500, 600, 800, 1,000% yields on an annualized basis, then that looks really good. But I can tell you, as far as I know, we are the only gold and silver based newsletter out there, research newsletter, that actually has given the actual returns of every open and closed position, and who actually will give price recommendation point to buy and to sell, and also asset allocation model and a weight to every single one of our assets. So therefore we can actually give real returns every single year and not just give some kind of bogus annualized returns. And if you notice too, people will say, oh, these are the best performing assets on an annualized basis of our portfolio. They never give you annualized returns on a losing basis, because if you saw negative 480% annualized losses or negative 540% on an annualized basis, then again, immediately a red flag would go up, and you know that there would be something wrong and very funky about the reporting of those statistics. So as you know too, many financial consultants in the financial industry will tell you that there are free markets and that you should get in and always buy in the stock markets, whether they're from JP Morgan, Citibank, Goldman Sachs, Deutsche Bank, or any of the other big global banks. But if you watched one of our most recent vlogs that talked about how you can use Six Sigma events to accurately predict market behavior, then you know that absolutely are lies that they're telling you, because there's no free markets. Basically, it tells you that the markets are rigged. And it's funny because when you look at like a black swan event, they say a black swan event is an unpredictable event that has a very small percentage of happening. But actually, I think that's kind of backwards, because central bankers have so distorted market prices, have so destroyed any true price discovery out there, that the probability of what are called black swan events like are the Six Sigma events. If you don't understand what they are, just watch that vlog where I talk about Six Sigma events. I actually think that the probability of those events are actually fairly high because there's so much price distortion in the markets that for the market just to return to its natural state, you're going to get these huge and very volatile price movements that should be happening once every 3 billion years, but are now happening on a bi-weekly and on a monthly basis all around the world in the global financial markets. So, we also have one incident in, I think it was a couple of weeks ago, where Apple CEO Tim Cook leaked some information to a popular, I don't know if you call him an analyst, I guess he could be an analyst, I think he works on CNBC or MSNBC, Jim Cramer. And this was after Apple's shares had tanked by 19% in 4 days. So then Tim Cook said, hey, all our Apple app sales in China are much better than we expected. And guess what happened? Within that one day, that morning that Jim Cramer reported, he had received this email from Apple CEO Tim Cook. Apple shares exploded 50% higher in one day. And I still have, just as I told you, that a lot of companies manufacture earnings per share that look solid out of thin air just by buying back a lot of the corporate shares and shrinking that denominator. I really do question, what we're going to hear once Apple reports its earnings during the next quarter. And I really wonder if Tim Cook just reported that just to stop the bleeding that was going on in Apple shares. So and now I'm going to play you another clip where this is a meeting between Sheryl Sandberg, Robert Rubin, Hank Paulson, who was a former US Treasury Secretary, former CEO of Goldman Sachs, where Hank Paulson actually laughs about the greater wealth inequality he created in America during the 2008 crisis. And of course, a lot of people are saying, of course, it's so obvious he's joking, but yet Robert Rubin intervenes, and when Hank Paulson is laughing, saying, yeah, we created greater wealth inequality, Robert Rubin says, I'm serious. So, people always say people try to deflect blame using humor, but often there is sometimes a sliver, and even bigger than a sliver, a large amount of truth when people laugh about saying things to make it pretend like they're joking about it. And I think that's what was going on in this clip that I'm going to show you right now.
So let's follow up on a bunch of the different things we were. Let's start with income inequality.
Okay.
We're going to say yes, please.
So income inequality, this is something I think we've all thought about. I was working on that topic when I was still at Goldman Sachs, and
in which direction? You're working on increasing it.
Yeah. Make it wider.
But I think.
I would say.
I think Sheryl was approaching.
I think Tim just made up for his prior pessimism with humor. We appreciate that.
But in all seriousness, I looked at that as something that was
I was serious.